Hi everyone. So this video is about two paper trades that we observed in Euro-USD pair. So let's get into the video. Okay. So if you are seeing this, this is the Euro-USD chart, and here if you are seeing this in daily time frame, this is the yesterday's candle, and while we are observing, the price has already taken out this swing low. By the time when we look at the price, it was already taken out the swing low. So that's why we moved to paper trade rather than taking a real trade. But anyhow, for observation purposes, we just took a paper trade, and that is all about this video. So in daily time frame, the bias was overall bearish, and the price was significantly aiming for every swing lows which are present lower. So in this case, this low was already taken, and even though this low was taken, still the momentum is not yet reduced. So we were observing that okay, price has more possibility for it to reach for more lower lows. So that was our idea. So in daily, it was clear that the bias is bearish. And if you're going to 4 hour, the interesting part comes now. So wait a minute, yeah. So this is yesterday's candle. So this is where we planned for a trade and we observed everything. Okay. So yesterday, this is 9 a.m. candle and this is 5 a.m. candle. So here at 1 a.m. itself, this previous month low has been already taken. This previous month low was already taken at 1 a.m. And while it has taken out this previous month low, it also already formed this 4-hour FEG as well. So the overall momentum is bearish, and price cannot just like that reverse all of a sudden and cannot pump higher. So it needs some kind of consolidation at the bottom of the key level, and then once the key level has been formed for the bullish side, then only it will tap it and it will go higher. So before that happens, it will tend to create a strong support zone. Until then, we can aim for bearish trades comfortably. So that was the idea. And here, if you're seeing somewhat paying attention in this segment, you can see here this 1 a.m. candle has already taken out this previous month low, and the next candle, that is 5 a.m. candle, has taken out this 1 a.m. candle low, and it has rejected higher. But if you are paying attention somewhat more closer, here you can see this is the FEG, and this FEG has been taken out. See, price has taken out this FEG, and you can see it here. The price has respected this FEG. So this is the hidden message which we need to notice. Okay, so this confirms that okay, price has respected this FEG, but we cannot expect an immediate reversal from here directly. So we need to wait further such that whether the price is okay to take out this high and it can reverse further down, or it can go further deeper inside this FEG, upper FEG, and it can come down. So either way, price will eventually come down. That is not a problem, or that is not a confusion. The thing is from which part or from which key level it will come down. That is the main question here. So when we are noticing this price action here, it was somewhat 50-50. That is why we took a paper trade here. So as soon as price took out this 5 a.m. high, we took a paper trade here. We took a 50 minutes. We got a 50-minute CSG confirmation, and we took a paper trade. But even though it was somewhat confident in, it turned into a confident trade in the later point of time, because this is the area where we took the paper trade. See, so this is the New York session. The New York session has taken out the London session and the London Lens sessions high, and it has taken out. This is the Pakka CRT model. This is the Pakka CRT model. This is 5 a.m. CRT, 9 a.m. punch, and then expansion downwards. Okay, see here, after the CSG has confirmed, you can see more than 1 hour the price was consolidating inside this range. So whenever a price is given as a confirmation, it should be very uh, what can I say, in aggressive manner. It should come in our favorable direction. If it is tends to consolidating in a narrow range, then it becomes a lower probability one, because there comes a chance of 50-50 where it can go on either side. Either it can go further higher, take out this high and poke into this 4-hour FEG, and then it can come down, or it can directly come down like in this case. Okay, so this became a 50-50 situation. That is why we took a paper trade here. But the another one interesting factor which we eventually noticed is SMT. Okay, so this is euro pair, and below this is GBP pair. Okay, in GBP and euro, here we can see this is 4-hour FEG in euro. Similarly, if you are seeing this in wait a minute. Yeah. Similarly, if you are seeing this in GBP, here you can see this is the bearish OB. This is an A plus bearish OB because this is for our FEG in GU, and after tapping it, we got an engulfing candle here. And here also, pay attention, pay attention. This is the 4 hour time frame. This is upper one is EURUSD and below one is the GBP pair. And here, if you're seeing it's somewhat closer, like we observed it in GBP, here see price is respecting. See the candle closure, how it is closing. You can see wick has gone somewhat higher or lower. That is not a problem. See the body closure, how it is respecting here. Okay, so here you can observe it like price has rejected nicely from the 50% level of this 4 hour OB. Okay, and if you are seeing the same SMT in 15-minute range, see here. So this is the point where we got 50-minute CSG in euro. Similarly, here you can see it here. Price has formed higher high here, but here it has formed a lower low, lower high. Sorry, this is the SMT, which we need to notice hereafter for every trade. Okay, so this is the SMT which we observed between these two pairs, and this concluded that okay, euro is more bearish when compared to GBP. So this is how, by comparing these two assets, we can get an edge, or we can get further confirmation over our entry that okay, that key level can become a high probability one, or your entry can become a high probability one. This is how we need to distinguish between the entry level traders and somewhat experienced traders. So this is one example. This is example one or paper trade one. Similarly, the same thing happened today morning also. That also I took it as a paper trade, and this is for your observation. Okay, so this is trade one that has been ended. It has given us a TP that is around 2 to 2.5 hour. That is fine. That is end of chapter. So the next one is trade two, paper trade two. Here, this is today trade. This is current price action. Okay, so this is 90M candle, and same like previous trade, previous scenario. See here, price has respected this 4 hour FEG and it has closed down. Similarly, same kind of price action you can observe here. Again, the 1 AM candle, the current candle opened, it has taken out this high and it has immediately fallen down. Okay, so similarly, if you're observing it in 15 minutes, you can see the same pattern. Here, see here, this is Asia high and this is the 4 hour FEG. I will mark it as 4 hour FEG. Yeah, so this is the 4 hour FEG. Similarly, the key level for euro is, sorry, GBP is 4 hour OB, because here we are seeing this 4 hour FEG, but here after tapping in this 4 hour OB, the next OB has formed here. So we can consider what happened. Oh, euro is gone up. Okay. So this OB has formed from the previous OB. Okay, so we can consider this as, this is our first OB. After tapping this OB, this is next engulfing candle, and this can also be considered as an OB. Okay, so pay attention closely here. See how the candles are respecting the 50% level of this OB. This is the entire OB. I have considered this upper wick as well, because this is the wick which took all the liquidity which are present above these candles. So this entire body can be considered as a OB for a OB. Okay, so if you are paying attention closely, here you can see price has neatly respected the CE level of this OB or the 50% level of this OB. And also you can see an SMT here as well. Okay, see this is above is the euro chart and below one is the GBP chart. This is the yesterday's trade. This is the SMT which we seen between euro and GBP. This is today's trade. See the vertical lines, red lines. This is the SMT time frame. See, here it has taken out this high. Asian high has been taken out, but here it has not taken out. See the SMT back in correlation. So as soon as price has taken out this Asian high, it has formed a 50-minute CSG. But one can expect that okay, this Asian high has been taken out with a smaller wick. So without SMT or without noticing this SMT, one can expect that okay, this can be a false CSD and it can poke higher, it can again come down. But if we have noticed this CSD, then this could have been a easy identification, because here you can see euro has taken out this Asian high, but in GBP this Asian high is still intact. And even before taking out this Asian high, it has given us a CSD, and this confirms GBP is more bearish. Okay, yesterday in the paper trade one, euro was more bearish, and here in this paper trade, GBP was more bearish. So, which pair is more bearish? GBP is more bearish, and that is why it gave nice trade. This is more than 7-hour trade. See here, CBDR low was yet to be taken, but see here, the CBDR low was already taken in GBP because which is more bearish? GBP is more bearish. So that is why it has reached our DOL more aggressively in an easy manner. So the paper trade which I took was here, I guess. Yeah, yeah. These are the trades which we have taken. This is the GBP trade which we have taken, and I took also the partials as well, 147.50 something. So yeah, guys. So paper trading is not a big deal. So just for accounting purposes, we just took a paper trade in trading view. But the learning here is always check for SMT and always pay attention to the candle close after tapping into the key level. How it is respecting the key level, whether it is closing inside the key level or outside the key level, and wait for if there is possibility for the next candle to sweep the previous candle's high, then wait for it. And also that can be confirmed through SMT. If in one pair it has taken out any high or low, but in other pair it is not failing to do is, it is failing to do is, then that is the SMT. So with this example alone, we cannot become a pro, but through this process, we need to learn each and every day, and this is how we will grow. So thank you guys. That's all for this video.